Let's jump right into this explainer. Today we're taking a close look at something that surrounds us literally every single day, yet is still so profoundly misunderstood. We're talking about capitalism. Think of it as the ultimate operating system of modern life. It's just running constantly in the background of basically every transaction we make, every career move we navigate, and really every goal we pursue. So let's break down exactly what this system is and how we got here.
Harvard historian Sven Beckert really hit the nail on the head when describing the sheer scale of this. He points out that capitalism isn't just about Wall Street stock tickers or giant factories. It actually shapes how we pursue love, marriage, and family. Literally, it determines how most of the world works, eats, and sleeps. So to truly understand ourselves and the modern human experience, we first have to understand the economic logic that's governing it all.
So here is our roadmap for today. First, we'll establish a baseline by looking at the core of capitalism. Then, we'll dive into its surprisingly unexpected historical origins, look at real-world applications through mixed economies, and finally, unpack the modern capitalist debate.
Section 1. The core of capitalism. How the market works. Okay, starting at the absolute most fundamental level, capitalism is an economic system built entirely on private ownership. It's a setup where private property, businesses, and industries are controlled by private owners, entrepreneurs and investors putting their own capital on the line rather than being controlled by the state. And the main engine driving all this? The pursuit of profit. It relies heavily on fierce competition, voluntary exchange in free markets, meaning businesses decide what to produce based completely on what we, the consumers, actually want to buy.
Now, to understand how this voluntary exchange actually functions, we have to look back at Adam Smith, the founder of classical economics. He introduced this beautifully counterintuitive concept known as the invisible hand. The basic idea is that in a free market, individuals naturally pursue their own self-interest, right? A business owner wants to maximize their profit, so they end up producing goods that satisfy the biggest needs of the people. Through this natural competition for scarce resources, the invisible hand basically guides the market to benefit all of society, totally avoiding the need for some central government planner to direct everything.
Let's see how this market mechanism plays out in real life. Imagine a quick thought experiment where we have competing manufacturers of lemonade and iced tea. Suddenly, tastes shift and everyone wants iced tea. So what happens? Demand for iced tea skyrockets, so the manufacturer naturally raises prices to capitalize on that demand. Meanwhile, the lemonade seller is sitting on a bunch of surplus inventory, so they have to drop their prices just to stay competitive. Consumers immediately notice the deal, start buying up the cheaper lemonade, and boom, demand is equalized across the market. Prices, supply, and demand are constantly interacting in this self-regulating dance.
Section 2. Surprising historical origins, from war finance to the wealth of nations.
Get this, the origins of the actual word might completely surprise you. Capitalism didn't originally describe factories or free trade at all. It started as a French term describing 18th century war finance. Writers back then used it to characterize a highly unstable system of massive government borrowing and public debt used to fund these incredibly expensive wars. So it actually started as a term to describe a deeply political and social crisis, which is pretty wild considering the bustling industrial concepts we associate it with today. But while the word itself might be somewhat newer, the actual practices of capitalism stretch way, way back. We can trace early forms of capitalistic behavior all the way to 9th century medieval Islamic civilizations. They were using stable currencies, advanced trading companies, and even complex concepts of credit to sell products for a profit. Fast forward to Europe between the 1600s and 1800s, and we see the rise of mercantilism as they transitioned out of the feudal system. And then, finally, the modern theoretical framework officially arrived in 1776 when Adam Smith published his massive work, The Wealth of Nations.
To really grasp Smith's ideas, it helps to contrast them with what came right before, mercantilism. Mercantilism basically viewed wealth as a fixed pie, a strict zero-sum game. Nations would heavily regulate their economies to hoard precious metals and maximize exports. Adam Smith totally flipped the script. He championed free trade, arguing that wealth isn't fixed, it's actually created through the division of labor and specialization. He and thinkers like John Stuart Mill advocated for laissez-faire, which basically translates to leave it alone, arguing that keeping government interference to a minimum allows people to thrive and brings about the greatest prosperity.
Section 3. Varieties in Mixed Economics, the Real-World Application.
Now, the reality is, unrestrained, pure laissez-faire capitalism has almost never existed in practice. Just look at the US in the early 20th century. It was fiercely free market, which created some fabulously wealthy industrialists. But that era came to a crashing halt with the Great Depression. Millions of people lost everything. To correct this massive market failure, FDR brought in the New Deal in the 1930s. This introduced a mixed economy, blending those capitalist markets with socialist-leaning safety nets. The government stepped in to do things like insure bank deposits through the FDIC, create jobs, and establish Social Security. It was a huge, defining shift toward a more managed economy.
And even today, capitalism takes on very different forms depending on where you look. For instance, you have the American shareholder model, which generally favors lower taxes, less regulation, and focuses super heavily on maximizing profits for the business owners and investors, often valuing rapid innovation and short-term gains. But contrast that with the stakeholder model you see in places like Europe or Japan. This model puts a much bigger emphasis on a corporation's social responsibility to its employees and the surrounding community, prioritizing worker stability over immediate shareholder payouts. It's the exact same base operating system, but configured completely differently based on cultural values.
The UK is actually a really fascinating case study here because they've basically swung like a pendulum between these two approaches. In the 1980s, Margaret Thatcher introduced Thatcherism, which was a sharp turn back toward highly aggressive free market capitalism. She slashed taxes, reduced the welfare state, and pushed hard for private enterprise. It sparked massive economic growth, but it also really widened inequality. So by the late 1990s, Tony Blair pushed the pendulum back with the third way, bringing back more government intervention to manage the economy's rougher edges and focus a bit more on social justice.
Section 4. The Modern Capitalist Debate, Globalization and the Future.
All right, let's zoom out to the global stage today. Currently, 164 countries are in the World Trade Organization. The big goal here is for nations to pursue what's called a comparative advantage. By engaging in free trade and dropping tariffs, countries can specialize in doing whatever they do best and then just trade for everything else. This creates unbelievable global interconnectedness, drives down prices for consumers, and gives nations access to massive pools of foreign capital and investment.
But as you can imagine, a system this massive naturally sparks some fierce debates. On one hand, the advantages are undeniable: massive worldwide wealth creation, unprecedented technological innovation, and pulling vast populations out of poverty by connecting them to global markets. But on the flip side, critics point out some really profound challenges. We're talking about widening economic inequality, the dangerous rise of monopolies that just crush local competition, labor exploitation that feels a bit too much like the old robber baron days, and severe market failures leading to serious environmental devastation. It is an incredibly powerful engine, but its outcomes depend entirely on the guardrails we choose to set up.
Which leaves us with a vital question we are still actively trying to figure out today. What exactly is the optimal mix of free markets and government regulation? You see, capitalism isn't some static law of nature. It evolved from 18th century war finance through the New Deal all the way to today's hyper-connected globe. Understanding these core mechanisms, supply and demand, private property, and the invisible hand, empowers all of us to actually participate in shaping its future. So, as you go about your day, I'll leave you with this. What should that balance look like in your own life and society? Thanks so much for joining me on this explainer, and keep asking those big questions.